right, guys, we've got another Sunday scan coming at you, this time for the 22nd of November. It is the week of Thanksgiving. We've got a short week. Typically, I do a little talk on, maybe it's going to be a crazy crack week, and we've got all these different plays, and we'll have some crazy runners, but that literally describes every single day in 2021 and 2020. So, normally when I prepare for this week, thinking that it's going to be crazy, it disappoints. So for me, I'm just treating it business as usual. I know a lot of people always try to, suggest that there's going to be a ton of runners. There definitely might be, but that, like I said, is just another day in the past year or two. So I'm ready for it. Will we have some small cap craziness? Possibly. We just had a couple little fireworks start this past week on LGVN and GTech. So maybe that is a sign of what's to come into the weeks ahead, into the end of the year. And I'd welcome that for sure. I'd love to get long a few more of them. LGVN, I got long. That was a great opportunity, and then was able to get some of the short side. So hopefully we continue to have these opportunities. But once again, my focus personally is on the LCID type of setups, the RBLX type of setups, the IONQ type of setups, because at some point on these LGVN types, these GTech types, it will catch up. And so although I trade them, I don't outsize myself anymore. I don't go crazy aggressive. And the reason for that is because maybe 9 out of 10 times I will be right. I will get the right trade. I will make money. But it's that 10th time that ends up giving me the headache, giving most of it back, all of it back, more than all of it back. And to me, it's just not worth it. And as you size up, as you get more and more aggressive, you will realize that it's just part of, the building blocks of a trader, that you start to become your own risk. When you are trading an obscene amount of size on these small caps, at some point, one will catch up. Most of you don't have to worry about that. But that is just why, personally, myself, those are my decisions. A lot of the great traders that I know have outgrown small caps. So yeah, they'll still trade small caps to a degree. But then they start to go and venture on to the LCIDs, the RBLXs, the IONQs, in the situations where they can put real money and not have the same risk of maybe one or two traders just swiping it into circuit halt to circuit halt to circuit halt. So that is why you see me sort of focus on these big money, big volume types of plays rather than these crazy float rotation types of situations. Yes, LGVN was great. Yes, it offered a great short opportunity, and it offered a great long opportunity. I got long overnight as I went over in the room. I felt like it was probably one of the greatest traps that I had seen in recent time. And then we had a great gap up parabolic type move in the morning just to blow off all the stubborn traders that were probably sized in based off the volume rather than the float. And so anyway, we had some great opportunities last week. GTech, same deal. I thought that most people would be holding. I felt like it would become a retail crowded long trade because everybody sees LGVN, and wants to get the next one, wants to be patient, wants to let this thing work in case it goes to 15 too. And then as it goes, they've got this whole, ability to control the stock without all these other traders that are getting in the way, selling, taking their gains because everybody's holding for the next LGVN. And that's sort of the thought process that goes through my head in these situations. But as you guys know, it still needs to prove itself. Just because I have a thesis or a bias or an idea, you can't force your idea on any particular name, because if you're wrong, you're going to be really wrong. So anyway, I will go over a little bit of that. There are some really key takeaways on this LGVN and GTech. Looking left, I'll put up a few charts. You can see a nice steady base and a nice steady top. And in between those two levels, there's a lot of action that you could potentially trade. or just kind of things to watch out for. Not getting too aggressive at the top of the channel, not getting too aggressive at the bottom of the channel. And most importantly, I think for a lot of traders, and I think this will probably be one of the key takeaways for some of the folks that watch this video. What I see in our room, we have the Traders Lounge, and the Traders Lounge is essentially the off-topic Q&A, anything kind of goes, but just to keep the noise out of the main trading floor room. But I saw so many people just trying to figure it out. And if you just draw lines and see where it's stuck in a channel, it will help you. Take a step back. Take a step back. Look at the macro view and think about where and how you could risk in a better manner without trying to guess which way it's going to go. And I think that's what it comes down to. When you start to see it go flat for an hour or two, what is your edge? It's either going to pop up or it's going to pop down. So you're going to put money at risk. You might as well flip a coin. And that's really, I think, a key point on these types of trades. Once you start to go into that holding pattern, you need to take a step back and ask yourself, am I outsized for this current 50-50 setup? And no matter what your bias is, maybe you're right. But if it goes into the 50-50 and it drops down real quick and spikes back up, there's not really an edge there. It's 50-50. So if you're outsized, you need to de-size. You need to get back to either no position or a starter position. And most people at that point are full size, anticipating which way it's going to go. And that's why these types of setups typically take money from people. All right. LCID. Very clean setup, great close on Friday, killer close. Great example of something similar to Tesla the first time, mRNA, NEO when the market gets crazy. Just these overextensions to the upside, overextensions to the downside, and then the rally back. Never underestimate, and I always say the bear market rally, but never underestimate that rebound. Right? It will go higher than you think, lower than you think, back higher than you think, and then it'll start to get range bound. And I think that's what we have for the week ahead on Lucid. I do think that if it gaps up in a big manner, I think we'll have a nice fade opportunity. If it has a weak open, I think it might come back flat. But it's going to start to get choppy. And so for me, I need to realize that I can't be using the same size I might have used last week. You can get away with a lot of size last week when there's liquidity and indecision in the market. When you're constantly, ripping one way and going back the other way, ripping the other way, you can get away with trading a lot of size. But as that starts to tighten up, you need to watch the size that you're trading, because, that might just swipe up and then just have that nice steady grind, and you're already outsized and end up losing pretty big. So just be aware of what worked last week, size-wise, liquidity-wise, may not work next week. And that's why you see me kind of surround a move on a trade and then move on, right? Move in, move out, move on. I've said that before, and that's why I don't get emotional about trying to force a trade and trying to get every last penny out of a particular move. I want to take advantage of that action and then move on. And if it sets up again and it sets up a couple days later, fine, I'll trade it again. But that action, move on, find the next one. That's where my edge is as a trader. My edge is not once it starts to consolidate and trying to anticipate which way it's going to go. It's no different than trading LGVN during the day or GTech during the day when it's stuck in a channel. So I think the key takeaway from that is, where are you spending your time? What are you spending your time on? And if your time is spent positioned, anticipating either up or down, when the potential is 50% up, 50% down, then I think you need to recheck your strategy. And I do think that a lot of people spent a lot of time trying to figure out things such as GTech and LGVN last week. All right. I think that is what I had prepared for notes. Before I forget, Sunday winners for the shirts. We've got BTO, We've got James McCurdy. We've got Charles, and I only picked this guy because I'm going to absolutely kill his last name, but I wanted the challenge. Charles Nodelsadir the fourth. That one's spelled really crazy, and I don't know if I got it right, but it sounded right. And then one Sulster, Sulster. So you guys have got the shirts for this week. All you have to do is like the video and comment, give me a key takeaway. What was it that was an aha moment from whatever I was going over, whatever I said? And like I said, if you post that in the comment section, other people can go through it. They can click that timestamp and see exactly, what I said, how I said it, when I said it, and maybe it's an aha moment for them. So you leaving a comment could help many other traders. Last but not least, obviously it's that time of year. I have to do my sales pitch. So it's Thanksgiving. We usually do the Black Friday sales and Cyber Monday sales. So I don't need to tell you that the market's crazy. You guys know that. I don't need to tell you that there's opportunity every single day. You guys know that. If you guys are interested in coming on board, as you know, Black Friday, Cyber Monday are always our craziest deals. We always reach out to different companies in the industry to try to get bonuses, to try to make it a no-brainer. And so we've added on even a bunch more different things that you can get access to just by becoming a subscriber. So there's a lot of bonuses this time, and we've got Dash Trader as usual. We've got scans. We've got Trading Sim. We've got everybody that does it also can access Avidity Fitness, but we also have Benzinga Pro for the month as well. So I think that all of these things together, it ends up making it a no-brainer if you needed that little nudge to become part of the community. But as always, if you do sign up, if you do become part of the community, those prices are your prices for life as long as the subscription remains open. So when we do raise prices at the beginning of the year again, once again, you will continue to have those same prices. So I think that's about it regarding my sales pitch. IU's always got some of the best talent, and the community continues to thrive. We've got great news guys, great contributors every single day, posting great either news, information, breakouts, you name it. So if you guys do have questions about IU, by all means, reach out, cam@investorsunderground.com. And as you guys know, I don't typically do a sales pitch unless it's maybe once or twice a year when we have a big sale. I pride myself in not selling every single Sunday and just delivering solid content. So I appreciate you guys watching the videos, and I appreciate you dealing with 1 minute of a sales pitch that I don't ever do. So we'll see you guys in the room. Let me get to the questions that were sent in, and then we'll get right into the scan for the week ahead. So first and foremost, could you please discuss the price action on GTEC and LGVN? Very similar inorganic action where outer key levels work for both long and short. So yes, and this was a very key example of looking left and understanding where the supply was, where the demand was. And the sooner that you realize where those levels were, the better that you could potentially trade it. Now, you can't assume that it has to hold that top or it has to hold that bottom. You've got to think about whether or not if it flushed, if you're okay, if it broke out, if you're okay. And so you use that as a guide to kind of potentially scale in or scale out among around whatever trade you're making. But I think the most important part about that is when it breaks either under it or over it and it comes back and it ends up holding a higher low, that prior resistance becomes support. That's when you know that outlier move could potentially start. So I think that the easiest thing to do on GTEC and LGVN is to draw those lines, and I drew those and I posted it on Twitter this past week. But you can see exactly how it could help you. and it doesn't even mean that you need to make a trade on it, but it at least remind you. If you put those lines in, it'll remind you, hey, maybe I need to adjust. If you are trading it, maybe I need to adjust here. Maybe I need to be aware of this level. And a lot of times you'll see how clear it becomes the sooner that you maybe throw away your bias, throw away what you think that it should do, and just accept the fact of what it is, what it is doing. So next one is, hi Nate, very grateful for your videos every Sunday. You speak about avoiding the front side and wait for the back side. Had a lot of trouble finding the back side in real time on VOSO on November 18th. Got smoked thinking 1750 was the top, 17 lower high. Couldn't trust the 20 top and missed the move. So, for me, I usually let things kind of do one more push, and I think, and VOSO is definitely a crazy one, a thin one. Normally, what I would do as far as scaling in, so if hypothetically I started in on that 1750 move, and it pulled back a little bit, 17 stayed heavy, and I added in. If it starts to reclaim that 17 level, I'm going to probably, if I'm sized in beyond a starter, I probably want to size back down. Because in this market, there's no reason to wait with any size if it's not doing what you think. You can always get right back out. And, a lot of people always are afraid to either pay commissions, afraid to eat a small loss, whatever that case may be. But if you do move on, if you do size out, it gives you that ability to make sound decisions rather than emotional ones. And what happens is you stay there 17, 18, 19, then you make an emotional decision into the 20 push. And that could be avoided by just sizing down. And when you didn't want to take a 20, 40, 50, 100, or $500 loss, it turns into a 500, 1,000, 5,000 loss, right? So think about that when you're faced with a decision, okay, I've sized up, it's not doing what I thought, and then size back down. That's my opinion. And, otherwise just draw a line. Draw a line of where it's holding. And a lot of times, if I start into something and it flushes out immediately after, that tells me that, yeah, it did have, it was an overextension, it did flush out, but I use that flush out level where it caught as that new breakdown level. And I think that's where a lot of people get trapped. I think a lot of people see that flush and they think, okay, I got it. But a lot of times it's just a flush and it continues on. Flush, continues on. Flush, continues on. And if you start to think in terms of where did they catch it and use that level as your confirmation level, I think it'll be a lot better. And a lot of times you'll realize that when you were adding, it was just a consolidation after a little bit of a pullback. So wait for it to tell you, wait for it to confirm. And anytime that there's a flush, use those levels to your advantage to kind of guide you where a breakdown may start to occur. Next one is, you talk about looking left a lot on Sunday scans, but how do you approach targets for stocks making all-time highs, especially on a newer IPO? Are you using fib extensions, or is it based on previous daily moves that may have occurred? For example, the 30-32 move on IONQ comes to mind. So the question there is related to these recent moves that don't have much price history. And my goal on IONQ was, a gap up in 30-32 parabolic, and we got right there, and then obviously it came in nicely. So for me, it's really based on the price action. How is it trending? If it's slowly grinding and grinding and grinding, then it starts to speed up. Starts to speed up at the 25 range, 27 range, 28 range. To me, I'd want that 32 to 35, 30 to 32, whatever that case may be on each particular stock. So it's based on how it's trending into that, either the breakout, the highs. And so if it was just a slow, steady trend, maybe I'd be looking for 35 or 40, right? But it just depends on how fast and how aggressive it's coming into that particular breakout. Was it a squeeze into the prior close? And it was. So if it's a squeeze into the prior close, a lot of people are squeezed out into the close. So any gap is probably not going to maintain as well as it would have, because they've had that squeeze out the day before. So now it's just a little bit of continuation of momentum. But the nervous shorts, the aggressive shorts, the ones that were oversized, probably were that move. They were probably that move into the close. So the next morning is just going to be maybe a gap up, a little bit of a gut check to the rest of the shorts, and it's either going to catch and continue or fail and unwind. And that's why I went with that trade where it continued to unwind. The last question is, how do you reset your mind every day and not fall in love with tickers after you win big on them, only to give it away? So I think this is a great question because we do tend to do that, right? We feel like we see things perfectly, so you got to go back to the next one. You just made a whole bunch of money on this one. I'm going to go back to it and do it again. And I think that comes back to what I was talking about on LCID and understanding when there's an edge and when there's this back and forth of this great range and when it's going to potentially tighten up, such as I would say on Lucid, probably Tuesday through the rest of the week. I think Monday's going to have some great action to take advantage of off the open, but after that, I need to take a step back and not be aggressive on size, because otherwise I'm going to try to do what I did last week on it and then just chop myself up in little pieces. So I think it's really about understanding the setup, right? And so, a lot of times people get emotional on Twitter. You talk about, say, for example, CEI or any of these other retail crowded names. And you start to take a differing opinion, right? That opinion, that bias lasts for 3 days, right? You got an overextension, gap up, pull back, unwind, done, move on. Move in, move out, move on. Now, everybody's bias and emotion continues to be there after, right? The short's this, and there's always all these different excuses. But for me, the trade's done. It's about the setup. It's not about the individual name. And I think that's probably the answer to your question is what is the setup? And yeah, sure, you made a bunch of money on it, but that was a setup. It's not about the name. It was a setup. So when that setup is gone, your edge is gone, you should be gone. So think about that. I know on, for example, UVXY and VIX, right? I have a very, very good read the first time that they get wild. I get a great read on it, great trade on it. But I know that I typically go back and just start to donate back. Same thing on TQQQ. I've been actually really good at being aware of that on TQQQ this year. It's been a great trader for me. But in the past, similar to the question that you asked, I'd crush a trade like TQQQ. I'd crush a trade like UVXY. And then I just go back and try to do it again. Go back and try to do it again. Go back and try to do it again. And I'm just trading to trade. I'm trying to force the same trade that happened. But the difference is the setup is not there. And so I think that's the common theme here, is that as long as there's a setup there, you have a trade. If there isn't, don't trade it. So that's it. Let's get into the video for what I'm watching for the week ahead. All right, so now we're into the second part of the scan, which is what I'm prepared for the week ahead. Once again, I'm not a financial advisor. These are not buy or sell recommendations. These are for educational and informational purposes only. These are my ideas, my thoughts, and how I am prepared for the week ahead. And they should not be used as a buy or sell recommendation, but more so just sort of understanding my process and how I spend the weekend and get prepared for the week ahead. So first and foremost, I think LCID is going to be another great trader for the next day or two. I don't want to force a trade. I think that there is a big reactive trade coming. This is a great example of things going further than you think, and then lower than you think, and then right back up higher than you think. This makes a lot of sense. Last week we talked about it, the week before we talked about it, and even the week before we talked about it. Back when it was under 30 bucks, and I was thinking that we were going 50 to 60 bucks on Lucid. We're here. And the reason why I thought that we were going 50 to 60 bucks, the reason that I explain is because Tesla has now opened that market cap up, right? We've gone from 300 billion to 500 billion to a trillion to beyond $1 trillion market cap on Tesla, which you start to look at these other EV names and 20 billion seems cheap, 30 billion seems cheap, 50 billion. And now I think Lucid's up to, I don't know, maybe 80, 90 or 100 billion at this point. It just makes sense, right? Because as that market cap expands on Tesla, it makes sense that it's going to start to kind of, expand across everywhere else. But then you had something thrown in there. You had the Rivian IPO, RIVN. And this goes from $75 billion to $150 billion market cap, which, when you compare, Lucid becomes super cheap. So in this current space, in this current market, Lucid is now super, super cheap relative to Rivian, relative to Tesla. So that's what matters right now. It doesn't matter if this is a crazy valuation. It doesn't matter if each car is valued at $1 billion or whatever. I know it's not, but I'm just exaggerating a little bit. But the point here is that you got to go with the times. It doesn't matter what you think. It doesn't matter what makes sense or what doesn't make sense. This is the market, and it's up to us to not even necessarily understand it, but go with it, right? Just gotta accept it. And so that's why it had that next leg up, in my opinion, was the Rivian IPO. So anyway, I do think that we're going to have an edge here. I do think that we're going to have a great opportunity. And the way that I see that kind of unfolding is maybe either gap up, reactive trade, and sits back, move on, or weak open and it rallies back and move on. If I were to trade it the rest of the week, it would probably be a 9:45, 10 a.m. type of trend join. I think trying to force the trade is going to get you in trouble. And we talked about this as well in the room this week. I know it's trading 100, 200 million shares a day, but it is thin. It is a thin name. There's a lot of volume, I know. But if you are actually trading any size, you will see that as soon as it shifts, it is paper thin. And so you need to be super aware and super cautious. The more you size up, if it's going against you, you've got some serious exposure. So I think a reactive trade on Monday and then trend joins the rest of the week. But I do think that things are going to start to tighten up. I think that volume is going to start to go to 50 to 80 million and then taper off to 30 to 50 million a day. So I do think that we probably hit peak volume this past week and potentially Monday, Tuesday, and then it's going to start to taper off. So for me, I need to be aware and make sure that I'm positioning correctly without being too aggressive. It's been a great trader. If you look left and look at key levels, it's been working really, really well. And you can also even see, that this thing went right back to prior levels of support. Right over here, and right down over here. So, you've always got that outlier move. You can always, say, hey, it broke here, just like we talked about LGVN or LGFN. Which one? Yeah, LGVN. That's always going to happen. GTEC, same deal. It's always going to break out one way or the other, but it's just about the overall, where does it hang around? Where's the congestion? Where does it consolidate? Where's the magnet? And you can see just how clean that was. So, we'll see if you go back over here, you can see obviously a double top right here, which is, again, a nice looking left. That was the short thesis that particular morning. But, maybe we come back up. That would be great to come back in and check with this level on Monday. And the reason for that is you can see the congestion in that area. The top here and the top here. I'd love to see it go back up to the highs, but, we'll see what happens. F, I've got this bias that I feel like, I do think it's going to end up over 20, 22, 25 or something like that once I take it off of radar. But I do think that it needs that flush out, that day that it's just going to clean everybody out and then it comes back real fast, just like we had on Lucid, right? So Lucid cleaned up a lot of sellers, a lot of people that maybe were outsized long and they were just looking for a reason to sell, and they finally said, you know what, screw it. Now they're out. Now it's higher. That's how it always works. But I feel like F needs that kind of a day, that gut check day, and I feel like 19 will open those floodgates. And you know, I could see it going 1750 to 18s. And now that doesn't mean I'm coming in biased. That doesn't mean that I'm super short biased. This thing's going to go down. Blah blah blah. It's my thought. I'm prepared for it. If it starts to prove me correct, I want to be participating in that trade. And I do think that it's healthy for it, because I do feel like it's been kind of pushing and pushing and pushing, and there hasn't been that moment where everybody is checked on their thesis. So a flush out is healthy, comes back up over these 19s. I think that's going to be the key, is not getting too biased on the short side. So I do think we're going to have this huge unwind, but I think that same day it's going to come right back up, or the day later. So the key is just not to get aggressively short, once it turns. But I do think we're going to have that reset day, and I'm just hopeful to be there for it. I want to prepare for it, but I do think that it could go further than you think. Take out 19s, flush under 18s, then potentially come back. RBLX, another one, has been fantastic. Once again, nice opportunity looking left right here. You can see how it failed. That was a trade in the room on Friday. Same deal. You can do the same thing with the support levels. And you can see how this area over here held. Always look left to gather some ideas and some conviction on particular trades. I think it will help you. This type of trade, 140, 142, 145 would be ideal. Some type of gap up, parabolic move, and then starts to sit back would be ideal. The only other way that I would short this thing is if it has a weak open and it just kind of fades off. I don't want to think that this has to pull back. This is a big momentum move. It's the type that can continue to grind and grind and grind further than you think. So we've seen this happen on a ton of different names, and even stuff like UPST, right? Kind of looks similar to that type of action. So whether or not this is going to 180, 200, 250, we'll see. But the only edge for me is either gap up, parabolic, or if it has a weak open and it fades off. But I'm not thinking that this is super short bias. I'm not thinking that this has to pull back. I think there'll be another trade or two, and then I think you'll start to see dips get soaked. Next up, G-Tech, higher the better. I do think that it's super long crowded. I do think that we gap down. I am hopeful that we get a gap up. Same deal that we talked about. Draw those lines. They can help you in a big, big way. You can see the two levels of sort of support, and the second one, you can see where it pretty much held even after hours. So 870s, 850s. Ideally, we get some type of push up towards 950s or higher, and then it starts to fade. Patience, 870s, 850s would be that failed follow through momentum spot. But very clear, concise levels, and it could really help you keep the emotions out if you are trading that name. LG, I can never get this one right. LGVN. LGVN, another great example. And same situation. I had posted all these levels ahead of time, but you can see how these prior levels are so key. And not only that, this is the peak, right? Then they swiped it after hours. But what happened? Now this prior resistance became the support over here before that next squeeze. So I think that that's very important to see. That's what helped me with a little bit of conviction for that long trade overnight and that action in the morning. So as much as I am looking for failed follow through, as much as I am looking for potential that this can pop and then fail back and fill the gap to, I think it was 8 or so. As much as I do think that could happen, we've had a lot of volume. We've had almost 400 million shares traded, and it's a tiny float. So open mind here. We could have an outlier move. I don't want to be too aggressive in any one way. So I'm prepared for gap up, failed follow through. But if this starts to hold and should have died, use your imagination, because it's a thin flow and there's a lot of volume. And you've got T+2. So Monday, Tuesday, you might have some buy-ins if they loaned out too many and didn't deliver the stock. AUR, this is a nice runner. Very clean. It would have been nice to be there at the end of the day. I took off early on Friday, but nice squeeze out at the close. I'd be looking for basically pops versus 16s. I'd love to see 16, 50, 17, but we'll see what happens. But morning shove, failed follow through, and potentially fade off. And it could act a lot like that VOSO, which I know they changed their tickers, but same deal. It pretty much had its run, and then the next day it actually continued to go down towards 10. And the higher the better, and maybe we get some type of gap fill. Sometimes these types of moves that have really run into these earnings reports or news events or whatever the case may be on particular names, sometimes even though it does okay, they killed it, they did an awesome earnings report, gap up, yeah, that makes sense. Sometimes it's been priced in. So I don't want to not take the short just because, the numbers were great. It might have been priced in. So I do think that we could actually fill the gap if things stay heavy. So I was there, I was short, but I covered a little too soon. But I do think that we could be in for maybe a $2 type of pullback. Again, that's an idea. It's my imagination. Whether or not it stays heavy is going to be the determining factor whether or not I take that trade. So I don't want to go in and short it and think that it has to pull back. But if it does and it proves that my thesis is correct, then I will continue to scale in. If it's wrong, then obviously you don't want to fight it. A couple others, QS and IONQ. Those ones, I'm just looking for all pops that potentially fail to follow through. It does feel like QS is barely hanging on. It feels like it just kind of was a afterthought with the EV space, and I could see this kind of fading back towards the high to mid 20s in the near term. Switching gears to the continuation sector, there's been a lot of great trades. BTBT last week was an amazing one. It hit 5 from like $1.40s. But then it came in, it was a huge short squeeze, and then it came in. So same deal with, forget the other one this week, Retail. Same deal, huge short squeeze, and then it came in. So there's a lot of great opportunities. We were talking about this one in the room. They kept on buying. There was huge bids, 500,000, 1 million share bids. But once it breaks trend, don't you dare overstay. Because you'll just be part of the unwind. So those actually both offered some great unwind trades as well. There's a lot of air coming out on some of these other ones. I started that Tilray swing. I haven't added anything to it just because there's no reason to. You want to be proven right. And like I said on the last video, is I'm thinking, over the next couple weeks, I'm looking to position for something 3 to 6 months out. But that breakout did not hold, so it's nothing that I want to scale into because, who knows, we could go single digits here. So you want to be proven right to scale into a position. You don't want to be trying to anticipate where it's going to rebound. That's when you get in trouble, and you should never add to, crappy positions. KZR, weak opens, breakouts. Medium term kind of thought here. I traded it long. I sold the rest on Friday, but I am looking to reposition. And maybe this is one of those ones that floats up to 20, 25, something like that. But feels like they trap shorts, and it feels like it has a new shareholder kind of base that is waiting for the next thing. So so far so good. Like I said, no position at the moment, but I am looking to participate on dips as long as this, this level over here on the recent low holds. HCDI, No position, but you can see why I'm interested. It's the same chart that I always go over. You had that transitional day, and then you've got a bidder since. So I'm interested potentially versus 220s. I'll be looking for that. FCUV's been a great trader. Every time it starts to break out, it just slams down. So you can see that over here, and you can see that right over here as well. So I had mentioned that in the room when it started to break out. Reminded everybody, I'm in from the low 8s, but don't chase this. They know exactly what they're doing, and as soon as you start to buy because you get excited because it looks like it's going to break out, they just slam it right down. So it's not something to chase. But it is near a very big breakout spot. So if it gets a PR, if it gets over this prior level, you can see that 1040s, 1050s is really that key level. TRT, same deal. Lower the better for a breakout. PPSI, same thoughts as the room this past week. So far, it's in a holding pattern between 7 and 9. If it gets over 9, then I would like to scale into this and anticipate a potential squeeze. It does feel like shorts are in trouble on it, but at the same time, it came up from cheap, and it may just kind of taper off and fade off. But if there is a PR, if it does break over that 9 and hold, then we could have a pretty big move here. But so far, it's suggesting that 9s is the peak. But same kind of thought process as TRT and PPSI. They both should have died at this point. And the fact that they're kind of holding on, if it starts to prove, I would continue to scale. If not, then there's no point to chase entries on any of these things. So that's it for what I'm prepared for the week ahead. Like I said, it's Thanksgiving week, so there's definitely going to be potential small cap craziness. A lot of traders come back from school, college, things like that. But I kind of get the vibe that everybody's just trading in the world right now. And that's just how it's been for the last year and a half, 2 years. So I don't expect anything different. I'm not preparing any differently, but I'm ready. I think we'll have a great week ahead, and hope you guys have a good rest of the weekend. We'll see you in the room. And like I said, we have the Black Friday sales starting, and you can check those out. The link is in the description, and leave your key takeaway. As always, I give away free t-shirts for those that do leave comments. I will pick a handful of traders next week. Have a good weekend, guys.